Hey guys, how are you? Andy Suku, founder and CEO of Y2K Credit Solutions. So today I come with great news. Great news as far as being a homeowner. So before I get into the news, let's talk about what happened. About last week, mid last week, there was an article that posted that FHA changed the guidelines for being qualified for a mortgage if you worked in the servicing tipping industry. What does that mean? So unfortunately, not all of us have the luxury of working at a 9 to 5 job, making 100 grand a year. Some of us do, and we have a side job as well. Some of us just work at a job where we get tips. You may be a host, bartender, maybe work in the entertainment industry. Who knows? Wherever you work at, and if you're in a tipping industry where you receive a tip, prior to the law being amended, you had to work at the company for 24 months to be qualified for a mortgage or eligible to be pre-qualified to get a mortgage. Well, last week, article came across my desk from FHA that they've amended that rule, which is great for all of you that are working in a tipping industry, right? Now it's 12 months, and you have to have shown and document that you're making tips every month, and it's going to be the same next month. Now, the question is, how do you show that you're documenting your tips? For example, let's say, right, you have to have 2 bank accounts. This is the way I suggest you do it, just to keep it clean, simple, and easy for accounting. Keep it simple, right? You get 2 bank accounts, right? Bank 1 and Bank 2. Now, this can be with any bank. You don't have to use they don't have to be with the same bank. I prefer you get 2 separate banks. So if you're saving up for your house, you don't have access to that money so easily. So you're not dabbling into it and spending it, right? So Bank 1, let's say you work in a tipping industry and you get a paycheck and plus you get a tips. You work off of tips, right? So this is how you're going to keep track of it, because I'll post the textbook definition again for the law that changed, what it was amended, and what it says now. So you want to make sure you're following this to the T. Now, when I say I'm posting the textbook definition, I want you guys to understand that we do the research for you guys, but we're showing you the actual verbiage and laws and guidelines from these websites directly. I'm not making it up. I'm just shortening it and giving it to you guys, but I'm going to post the textbook definition so you guys can read it for yourself and understand it, okay? And it's not coming from a website from I don't know where. It's actually coming from these government websites, all right? So Bank 1, let's get back to this. Bank 1, you're going to deposit your payroll in here. Your regular payroll that you get bi-weekly or weekly, however you get paid, okay? You can't see that? Oh, you can't see that. I'll talk to you guys, but I'll tell you what I'm doing. So Bank 1, you deposit your regular payroll. So whatever you get weekly, bi-weekly. In Bank 2, obviously you're getting tips, so you're probably getting paid cash. So you want to show that you're depositing the cash into Bank 2 and keep that account separate. So you don't want to mix it up. So when accountant asks for the statements and how you're going to prove to the mortgage broker that you're getting tips every week on the clock, same amount, and it looks like you're going to get it for the next year, you can be qualified. Bank 2, you're going to deposit all of your tips there. Now, let's say you make $1,000 every 2 weeks. All right, $1,000 every 2 weeks, and you have a goal in your head. You want to save. You want to save. You're a big saver. You want to save your tips. Deposit $800 every 2 weeks for 12 months. That's how you're gonna have a record. Now it's the same amount going in the account every 2 weeks, same amount, and for 12 months it's the same. That's how you're gonna show your paper trail that you're getting your tips is now going up or going down. And I'm using $1,000 as a rough. It's just a number I came up with. I don't know what you make in tips. If you made $500 bi-weekly or a week, try to put at least 80% of that into the checking account and keep it the same consecutive for 12 months. All right. So now at the end of the year, when you file your taxes and you go to your mortgage broker and you want to get your mortgage approval, they're going to see that for 12 months, you made the same amount of tips every single month. Hasn't changed. It may have gone up, but it hasn't gone down because they can see by the deposits, the statements. And that shows that you've been at the job for a year and you're going to be there for the next year and the tips are going to be the same, right? restaurants, listen, every restaurant has their seasons. The seasons don't change. So some months is busy, some months is not, whatever the case may be, but it'll always be the same. All right. That's how you're going to show and how you're going to prove that you're able to qualify for the mortgage with your tips and with your paycheck. All right. Now, also, there's a couple more things you have to do in the law that they change. You'll see it. I'll post it for you guys. You can read it. It's not major. It's just documenting certain tasks that you do throughout the year. But this is great news for you guys. But I want you guys to remember something though. Even though this guideline has changed, and I always recommend anyone, listen, if you can buy a condo, not a co-op, don't get in co-ops, but if you can buy a condo, buy something, because one, it's going to be cheaper than renting, and two, you're going to have equity, you're building equity, you own something now. Okay, so I encourage everyone to use this new law that came out, or the amended law, for anyone that works in the tipping industry, servicing industry, that wants to purchase a home that's renting. But one thing I want to let you guys know, actually two things. Even though this law has changed and it's making it a little more easier for everyone to own a home, credit still plays a major part in this process. So if you're looking to buy something next year or 2 years from now, and your credit's not that good, or you need some work, get that process started now. Get that process started now, because remember, the credit score drives the interest rate, the income drives the buying power. That means how much house you can afford. All right. So credit is still going to play #1 role in this whole process. So if you have an issue with your credit, you need to get fixed. Get that process started now while you're saving. And it's a very simple plan to put together. If you need help putting it together, you can call my office, schedule a consultation, and we'll put the whole plan together for you and make sure you're following it and holding you accountable to what you tell us that you want to do and your goals, because we want to make sure that we deliver on your goals for you. But credit is going to play a big part. So if you have some issue with your credit, obviously give our office a call, schedule a consultation. But let's get you into that home. You always wanted to be in a home. You want to be a homeowner, the American dream. Stop renting. And you got to start somewhere. Everyone has to start somewhere. Whether it be a condo, a duplex, one family house, whatever you can afford, buy something. And the process is very easy. We're here to help you. We'll guide you through it. So there you go. This is great news for you guys. If you have any questions, drop a comment below and I'll get back to you guys. Talk to you soon. Have a great day.